Welcome back to the What You More podcast. I'm your host, Quinton Harris. You're dialed in for episode 246, and I'm really excited, probably a little bit more for this one than I am other ones, just because, I constantly am talking about the economic updates, talking about the impacts and the Federal Reserve and what it means for mortgages and what it means for mortgage rates. Today, I get to talk about a new sponsor to the show. I'm very fired up about this. So in this episode, we're going to be talking about our new sponsor, and we're going to be talking about how to adapt and thrive in this marketplace. All that and more in this episode of What's Your One More. All right, so welcome back to the show here. I'm not going to tease any longer. You can probably see it on the shirt if you're watching on YouTube. If you're not, check us out at YouTube at What's Your One More with the number one. Hit that subscribe button. You're going to get all the goodies we put in every episode, and there are a bunch to unload in this one. So let's get started. Our new sponsor to kick things off is Texana Bank out of Dallas, Texas. Keller, Texas, right outside of Dallas there. Been around for about 110 years. Very excited to partner up with them because they came to us and they said, hey, Q, you got this podcast. You got a great group of people over there. We think Charlie's a world-class producer. We've got a really cool product that we think your audience is going to like to hear about. And that's what I'm going to focus the energy on today. And this is not going to be an infomercial for them. If you're a real estate agent, if you're a loan officer, this is your episode because we're going to share something with you that has not been to market. And quite frankly, I've been doing this for 23 years. I saw this and it took me a little while to get my head around it. But once I did, it was almost like, the pistons were firing on all cylinders. It was very hard to deny the power of this. Now, it's not your traditional mortgage product by any means, so I'm not going to put you on snooze alert there. But what I am going to talk about is this Remlo. That's R-E-M-L-O, Real Estate Mortgage Loan Officer. Now, when I first hear that term, they've got this copyrighted and a whole program behind it. But when I first hear that term, I start to think of people that are pretenders in the market space that have tried to do something with this type of notion. So I'm going to break it down and go through it here. And one of the things I want to talk about was, if you're not familiar with dual employment, let me back up, punt, and talk a little bit about that. So in November of 22, HUD released a memo that said real estate agents can now be licensed loan officers. Licensed meaning that they hold a NMLS license number either federally or through the state. And this was a big deal because it offered some light on the fact that in the past, real estate agents could not be considered a loan officer on the same transaction. That was considered a conflict of interest. Well, in 11 of 22, HUD said, it's kind of silly. We see the pros of this, so we're just going to go ahead and do away with that. And there were some bad vibes in the air about it at first because a lot of people were like, how can you do that? Like, how is that okay? And I got to say, I was in that wheelhouse in 22 when this came out. What I didn't know is that a company like Texana Bank was in the background and putting together some program guidelines with very high-end attorneys to get this program approved. And they did. In 24, they came to market space with it, and I met them in the midst of 25, and here they are off and running with it, and it's pretty impressive. So one of the things that's going on right now is that with dual employment, you have two paths to become a dual employment person. Obviously, if you're a real estate agent, how do you become a licensed loan officer? So there's a traditional way, which is a state license, and many of you are aware of that. You have to take a 20-hour SAFE course, and then you have to go take your state's license and then get an approval for a license and hang that at some sort of lender, whether it's an independent mortgage banker or a mortgage broker. You hang that license with a lender, and now you're licensed to work with them. There's a federal charter exemption that takes place, which banks have. And you don't have to take the test. You do the fingerprinting just like you do as a loan officer on a traditional side, but you instantly get your NMLS number, which stands for the National Mortgage Licensing System, and you get the ability to start acting as a loan officer almost instantaneously. Now, there's some continuing education requirements to go with that, just like there is on the mortgage broker and independent mortgage banking side, but there's no test feature. And there's no 20-hour sit, wait, do this course, then go take the test. Again, there's continuing education. So there's a huge wall and a huge barrier that's taken down when you start working with a bank that has the federal exemption. And it's interesting because I've always felt like when I've talked to real estate agents about something like this, the biggest hurdle is I don't want to get my license. Like, I don't want to go through all that to go get a license. It's just not worth it to me. I tend to agree with that, by the way. I think one of the things is, when we talk about these pretenders in the space, if you may, is that there's people that, maybe a mortgage broker, maybe an independent mortgage banker, they try to circumvent the situation by saying, hey, come be a BDA, like a business development agent or a marketing agent with me, and I'll pay you a quarter. And that's, that's out there. It kind of has an icky feeling to it because oftentimes it's not even disclosed you work with a mortgage broker or an independent mortgage banker. You just you just do it, and then you get this money paid to you in the form of a pay stub, and it's like, all right, that's kind of got a weird feeling, and that's because it is kind of weird, to be honest. And the thing I liked about what Texana Bank did with Remlo is that they put it all out there and said, hey, listen, you're going to be an employee of the bank. You're going to be a W-2 employee of the bank. There's going to be a complete disclosure process between you, the agent, and the customer about your employment. And we're going to be able to present exactly how you would work with a dedicated team at Texana Bank to put together loan options and features for your customer. And that was one of the things that stood out to me the most, is the amount of compliance they've put into this program to allow for that. And it's pretty cool when you look at some of the stuff we're facing in today's market. Obviously, if you're a real estate agent, the NAR settlement kind of, changed the dynamics of how buyers and buyers agents work together with the buyer brokerage agreement. And then if you take a look at the lending environment, 1 in 3 mortgage loan officers are exiting the business right now. So what we're finding is there's some challenges in real estate. Obviously, mortgage lending hasn't been great over the last 2 years for a lot of people, and people are getting out. So the actual competition is shrinking at dramatic rates in there. And so when I take a look at that, one of the things I always ask myself is, how do I preserve myself in an environment that is always looking for ways to get rid of your position in this environment? Whether you're a real estate agent, whether you're a mortgage loan officer, whether it's AI, whether it's competitors, like, how do you preserve a foothold in this environment? So one of the things I really like about this product that kind of drove me to talk about it and bring them on as a sponsor. The other thing about the federal exemption is that you're licensed in all 50 states right away. When you're a independent mortgage banker or you're a mortgage broker, you have to get an individual license for each state that you want to lend in. With a federal charter bank, you're instantly in all 50. Now, to me, that's incredible from a real estate's perspective, because now that just kind of opens up all kinds of floodgates we're going to get back to here in a minute that, quite frankly, you don't have the option to do. And now with this product, you can. And if you want information on this product, we're going to have the entire slide deck and links of how to learn more about this in the notes section on YouTube at What's Your One More with the number 1. Right now, when you take a look at dual employment, it's available in 45 states right now. Now, again, banks are federally chartered. They can lend in all 50, but the dual employment concept hasn't quite been accepted by all 50 states yet. It's getting there. It's my understanding it'll probably be there by the end of 25, but right now there's 5, Delaware, Louisiana, New York, North Dakota, and Utah. But those are coming online very quickly as I even do this presentation. So when I look at what the future holds, how to maximize our longevity in the industry, what I always take a look at is, what type of value can we bring to our buyers, to our sellers, and our past customers while growing our business and ultimately present the max benefit to a consumer. So one of the things that I take a look at from this 50 state national charter is, how does this work? What does it look like? Well, right now, if you're a real estate agent, your income traditionally comes from the commission charged, whether you're a buyer's agent or a listing agent. That's traditionally speaking that's how your income is derived. Imagine an environment now where you have an entire team supporting you on the backside, and you go from being an agent to being a full service agent or a concierge agent, either of those terms. But a full service agent is someone that eliminates the love triangle. See, in real estate, there's this love triangle that I've witnessed over the last 23 years between the buyer, the real estate agent, and the lender. And it's always there, and it's always going to be there. When you can eliminate that love triangle and you're a direct connect to the real estate agent and to the buyer, a lot of things start to become very transparent. For example, if you're the real estate agent, you're a single point of contact for the entire time with this customer. And what we've seen over the last really year is that consumers are really starting to appreciate that, because there's not a lot of he said, she said, and there's not a lot of passing around. So when you do that, cool part about this program is, a real estate agent, you get paid 50 basis points as a Remlo agent in this product. So what does 50 basis points mean? It's 0.5%. So if you're doing a $500,000 loan, you're going to get $2,500 as a loan officer in a Remlo product here at Texana Bank. You're going to have a loan partner and a team behind you that helps put that deal together and helps collect conditions and helps structure it and close the deal while educating you and doing those same things. But it's going to be something you've never experienced before. And also the win to this is, imagine that database that you have, the database of customers that right now you're hoping you can help them buy another home. You can help them sell their home. But what happens when a refinance pops up? How do you handle that? How do you handle it when a customer doesn't want to move, but they would like to refinance? Do you refer that out to a loan officer? Or do you say, okay, yeah, rates are looking good, who you're going to call? But right now in this product, you can say, oh, I can help you with that as well. Because now as a Remlo team member of Texana Bank, you also get to participate in the refinances under your book of business. That's right. They go right into your pipeline, just like a traditional purchase goes right into your pipeline. Excuse me. That's something that I've never seen before. And now we're taking the agent and we're making them part of the lending side. We're actually bringing value to the agent with this product versus saying, hey, can we go have coffee? I want to talk about how I can provide value. And ultimately, it's always a meeting that goes somewhat like this of a loan officer trying to tell you how great their products are and how they close loans on time and how they call the customers back and how that they usually can close early and also that by using them, it'll help you get more business by helping them. Right. So essentially, that's the pitch, right? That's always the pitch. And the reality is like that's like basic functionalities of doing your job. There's really no value there. It just means you're doing your job, right? In this particular product, we're talking about value in the form of customer benefit and also value back into your business in the form of income generating revenue. Now, there's some bonuses in this. If you did $1 million in production a month, just like a loan officer would get an additional income stream for doing more volume, you too get additional income stream for doing more volume. So if you do $1 million in a month, you get 60 basis points. So if you did $1 million, that's an extra $6,000 in your pocket. This is something that is not just, hey, here's a couple $100. Like this is real money that can change your life in multiple different ways, whether it's bringing on a new team member, whether it's going out and structuring your SEO to get more leads. There are real items of value here that you just can't deny. And when I look at this, I'm going, wow, like this is something that, yes, I'd love to have you as a sponsor. I'd love to bring you on the show and I'd love to talk more about this because it's incredible how it works. And then one of the biggest hurdles I think people are looking at is like, oh, well, if I'm a real estate agent, I don't want to become a loan officer. Well, okay, well, let's back up. There's certain requirements that are to be done to be considered a loan officer. Knowing product guidelines in and out is not one of them. Understanding every single guideline is not one of them. You got a team that does that for you in the back office in this system. You don't need to learn to do that. So don't be fearful of opportunities because, you're psyching yourself out, or more importantly, you go talk to someone that you're currently working with on the finance side and they go, oh yeah, we don't have that. And here's why you don't want to do that. This product is something pretty incredible. And it's something that is mind blowing to me. The other thing in this product that kind of is really a neat feature that I haven't seen before either is a downline component. It's a first generation downline component. So if you're in real estate, you know exactly what I'm talking about here. So if you get into Remlo and you start talking about it with other agents and they join, now you get a downline on those other agents to the tune of 10 basis points. That's pretty impressive when you think about it. Downlines in perpetuity as long as you're a team member of the bank. That is something I've never seen before. And when I take a look at these wild, amazing opportunities, what does it take to be a part of it, right? What does it take? Like you're going to have people going, hey, I want to do it right away. Well, there are parameters to enter it because obviously you don't want just every agent involved, right? And I don't mean that in harm of like, hey, we just want to select few. What I mean is that there's some agents that are newer to the business or maybe just not doing a lot of business. Maybe they're part-timing it. Well, this product is calling for is full-time professionals, right? So there are some parameters on this. And here's the parameters of qualification, if you may. You need to close at least $3 million in real estate volume. That's parameter number one. Parameter number two is that when you enter the program, you are committing to deliver 6 loans, whether it's in a combination of refinances or all refinances or purchase agreements, that you will commit to doing 6 loans on an annual basis. That's one every other month. That ain't that hard. One every other month. And that's what I also love about this program. They're not calling and saying, hey, I want all your business. I got to have it. They're asking you to participate and slow walk into this. We have Remlo agents right now that do 100% of their business inside there. And we have some that do 80. We have some that do 50. There's walks of all lives inside of this, but there's opportunities galore of what can be done in here. And what we find traditionally is that people that get involved in the program start really adapting the program and then they start thriving. And then they start going, wow, look at all the opportunity that I have. I had an agent tell me if I had this 8 years ago, 80% of my customers would be enrolled in this through me because everything I do is sphere of influence. Everything I do is referral based. They trust me. And I think when you go back to that love triangle, right? One of the things inside of real estate, I think is the hardest question that every loan officer gets at some point in their career that is asked by the real estate agent, whether it's on the listing side or the buying side. And that is, why are we just now hearing about this? I mean, it's like the cringeworthy question, right? Well, what I love about this is Guess what? If you're a Remlo agent, you're on ground zero. Like, you're learning as the whole loan process takes place. There is no why are we just learning about this, because you're literally hearing about it as it happens. The transparency and the curtain has been pulled away for you to be right involved. They're giving you the keys to the bank so that you can understand exactly how this is done and be the best benefit for your customer you can be. What a differentiator that other agents don't have an opportunity to be a part of if you're not enrolled. The other thing on this that I often ask myself is, how many times as a real estate agent have you worked with a loan officer, good or bad experience, and that loan officer has blamed the underwriter at some capacity that, oh, well, the underwriter wants this. Well, why do they want that? Well, they just do. Well, can we talk to them? No, we're not allowed to let you talk to them. Guess what? As a team member of the bank, that underwriter is now your team member. If you felt the need to get on the phone with your loan partner and work through that with them, go for it. Absolutely. Like, the transparency, again, is there. The curtain is pulled back. The opportunities are endless in this particular scenario for you to be at ground zero and eliminate some of the biggest questions, some of the biggest woes and biggest concerns you have during the loan transaction. Another really cool opportunity in this, as a real estate agent, we're broadcasting here from Jacksonville, Florida. We have a huge military Navy base here in Jacksonville. We also have many of veterans as well and active duty military. How many times have you worked with someone, not just active military, but anyone that's bought a place, you were the real estate agent, and then 2-3 years later, they call you, maybe they got orders, maybe they got a job transfer, but they're moving. And they're moving somewhere outside of the state. Let's say they're going to move to South Carolina, Georgia. I'm just using proximity, Tennessee here, Michigan, wherever, California. They're moving. And typically what most agents experience there is when the move happens, the agent becomes the listing agent of the home to sell the home here. And then they may have the opportunity to refer them to an agent in one of those other markets, right? And then they get in their referral network. After that, you keeping up with that borrower is really going to be whatever CRM you send to them, as well as some Facebook or social media updates as to what's going on. Like, you keep up with them that way. Outside of that, they're off your radar, right? And it's not because you want to, it's just because they're in another state where you can't do anything for them, right? You have no ties to them. Imagine a moment where the person goes, hey, Mr. and Mrs. Agent, we're being transferred and we're moving to, insert in this scenario, let's say California. And you go, oh, wow, that's awesome. I can find you a great agent if you'd like me to out there. And they go, oh, yeah, that'd be great. Or no, we already got someone. Either way, right? But now you could also say, hey, I also have the ability to help you with that loan so I can stay a part of your next transaction with you and your family. And I can walk through that with you and be there overlooking the process to help you out to ensure you get the best product and the best experience out there. And now you get to be the Remlo agent on that, and you would get paid 50 or 60 basis points depending where your volume fell during that time, and that counts as one of those 6 deals in the transaction. And let's say that transaction goes as well as I know it's going to go. The agent on the opposing end is going to say, well, I didn't know you were a lender and an agent. And you're going, oh, yeah, have you heard about Remlo? And then guess what? If that agent signs up and they qualify, they're now in your downline. The opportunities of vertical integration in this are insane. And again, I've never seen another bank do this. There isn't one out there because the federal charter exemption is making this product so robust that I haven't seen that before. This is something that I think is incredible compared to what the pretenders are doing in the market. This is not a situation where it's like, hey, I'll give you a quarter and make you a marketing agent if you just send me your deals. This is a situation where you are a licensed NIMless loan officer under Remlo. You are working in a dual capacity, and you, more importantly, are transparent with your customer about everything from start to finish, including to the point to where if you're a buyer and you're presenting the buyer-broker agreement, you're saying, hey, listen, I can't even show you a home. I can't get engaged with you on anything until you and I agree to somewhere between 0 and 3% on this, maybe even higher. I mean, I'm just using these numbers. Most of it's 2.5 right now, but you're having that conversation with them and they agree to a number, and you say, if the seller does not pay me a commission, this is what you're responsible for. And that's part of the buyer broker agreement and the full disclosure. Oh, and by the way, as a full service agent, I want you to know that I can have complete control of the loan transaction, be your single point of contact. And I have the backing of a 110-year-old bank at Texana Bank as a Remlo agent. This is what I would make if I was to do your loan. I don't have to do that. And even if you don't use me for this, I can still provide wonderful services as a real estate agent and close your loan for you very, very confidently. But if you'd like me to have full control and be a part of the whole thing with you, I'm right here step by step if you want me to do that. And this is what I would make. Again, full disclosure and transparency, something that you don't see in the business when people are doing these pretender type situations. The compliance aspect is led by a great team of Remlo officers over at Texana Bank. I mean, the team that I see over there that I've interviewed before I brought them on as a sponsor, hands down, lights out. fantastic, super compliant oriented, and very thorough in there to protect you, protect the bank, and to protect the customer. This is something they've put a significant amount of time, energy, effort into. I'm very excited if you can't tell. I mean, I can't tell you last time I brought a sponsor on the show, did an entire dedicated episode about that sponsor and what they're doing. But I want to be able to talk about this. So when we start doing the Remlo commercials and we start talking about what this is, you're going, oh yeah, I remember that episode 245 where they actually broke this down. That was super interesting. It's beyond super interesting in my opinion. This is life-changing. And I said at the beginning of the episode, this is something where you can adapt and thrive and secure your spot in the real estate world. That's going to be very hard to poach. And I cannot stress that enough. When right now, many of the companies are racing to the consumer direct right now. There is a race to consumer direct, and it's being backed by billions of dollars. There's nothing right now that's intertwining the relationship between the agent, the lender, and the customer. Nothing like I've seen with this. Oh, and hey, listing agents, I don't want to leave you out of this. What a great opportunity, because every seller traditionally becomes a buyer. You know, listing agents, if you're listing heavy and you go, well, you talked a lot about buyers here, not much about listings. There's some opportunities with this as well. And what that could be as an opportunity is obviously if the seller is selling and becomes a buyer, then you can obviously talk about your services. We just did a whole 30-minute skit on that. But what about if you were saying, hey, listen, in my listing agreement, here's what separates me. Think about that for a minute, because I've seen many of listing agreements, many of them. Many of them claim they do this, they do that differently, they do this differently. But in reality, a lot of it's the same. And that's not me being mean, but that's a lot of the same stuff being spun 10 different ways to show what you do to become a listing agent, or excuse me, for a listing presentation. And ultimately, the seller picks based on two things is what I've gathered from many listing agents: who they have a bond with during that, and also maybe price has a lot to do with it. It's not always the all be all, but it does have a lot to do with it. What if you had an opportunity to say, hey, I have a little bit of leverage on this side over here. If you wanted me to be the loan officer on this, we can offer an incentive and we can have an opportunity for that person to work with us because we're offering the incentive. And during that time, I'll be in charge of the pre-approval. I'll have opportunities to take a look at the financing to know that we got a great deal or we don't have a great deal. I mean, again, possibilities are endless on this side because of the project put together by Texana Bank for Remlo. And to me, it's absolutely fascinating. And there's just so many different ways you can go with this. And again, I'm sure there'll be more that'll come up the more I learn about this product as well. And it's rather new, but it's exciting if you can't tell. So if you want more information on this, it's going to be in our YouTube channel at What's Your One More. We're going to have links in there on how to inquire, and we're going to have information on how to get started. More importantly, if you like this episode and you know someone that's in real estate, you should share this with them, please. Send it over to them, episode 245. Do it through Apple, do it through Spotify. Also, if you would, kind of review the podcast. We'd love to get your feedback. 5-star reviews are critical to us. The subscribe button on YouTube channel is our best friend. If you would, smash that up. We'd love to have you guys on YouTube giving us commentary, feedback. This one we think is going to get a lot of feedback, have a lot of Q&A on it as well. It's something we're really excited about and look forward to bringing on a new sponsor of the show, Texana Bank. Welcome to the show. We're glad to have you. Thank you guys for tuning in. We'll see you at the next episode of What's Your One More.
I got one more shot, I'm going to make it. One more chance, I'm gonna take it. I meant it when I said it, now it's time for me to do it. I got one life to live, so I put my all into it, yeah.